From Colorado's news leader, this is the #1 rated 9 News 6 a.m.
Well, after a solid start on Wall Street this year, some market watchers predicting the tailwind will start to fade a bit. One of those is Peter Tedstrom, certified financial planner with Brown & Tedstrom here in town. It's good to see you, Peter.
Good morning.
You and your partner, Mark Brown, have some thoughts about where the markets might be headed the remainder of the year. And I guess the latter half of 2010 might be a little tough, according to your estimates. Explain more about that.
Well, we do expect the markets to continue their growth pattern over the first half of the year. But as that growth continues and unemployment begins to gradually decline, it would not surprise us if government started to raise interest rates. And that would likely slow down the economy and the markets.
And stocks, as I mentioned earlier, up about 60% from the lows we saw last March. You acknowledge that the job picture is starting to improve. So why do you have such a mixed outlook? I know you mentioned interest rate. What else is playing into the markets here? Well,
the stimulus plan that many of the governments, including the U.S., used to ignite the economy back in 2008, that spending is likely to decline or fade. And as that occurs, and as unemployment declines, we think that interest rates will increase, and that will likely slow down things.
Despite your market outlook, you do caution your clients at least against market timing. Why is that?
We think timing is very, very difficult. We've been in the business over 22 years, or 26 years, I guess, and we've tried it from time to time, and it's virtually impossible. You may get lucky from time to time, but not likely to be a consistent success. So instead, we suggest that our clients stick to a plan. They look at their goals, their objectives, and evaluate their overall plan relative to their investments, make some tweaks.
Sure. Overall, kind of a mixed bag, it sounds like, at least according to you, for 2010.
We think so. We suggest that our clients use a combination of sailing and rowing strategy. Sailing, that when the markets are doing well, that those asset classes will perform well, but also to hedge those opportunities with investments that are likely to work well if the markets aren't doing well.
But bottom line, you and I have talked a lot in the past, especially during the depths of despair, I guess you would say about a year ago. Things are looking a lot brighter.
A lot brighter, yes.
All right. Peter Tedstrom with Brown & Tedstrom, thanks so much for joining us.
Thank you, Greg.
You bet.